Okay, you know what? We'll cut across to the press conference, get in more details from the management themselves.
And profitable. Our reported turnover growth at 11,276 crores is up 16%, with PAT before exceptional items growing at 11% and net profit at 9%. On a like-for-like basis, excluding the impact of mergers and acquisitions, our domestic consumer business grew at 3% with UVG of 1. If you would recollect, this is a big step up from where we were in June quarter, where on a like-for-like basis, our business had grown at -7, and on a reported basis, we had grown at 4. In the context of all of this, the health, hygiene, and nutrition segments, which contribute to about 80% of our business, grew at 10%. Now, let me give you a bit of a flavor about our divisions. Our household care grew in double digit, addressing the clean living needs of the consumers. Our Domex range is now available pan-India. In fabric wash, we have passed on the benefit of lower commodity prices to our consumers. Category consumption has, however, been impacted due to confined living. Continuous focus on market development is enabling us to grow our liquids and fabric sensation segments strongly. Coming to beauty and personal care, we are pleased to share with you that skin cleansing, oral care, and hair care have all delivered double-digit growths. Lifebuoy continues to deliver stellar performance across all segments, including hand wash and hand sanitizers. Oral care good performance is on the back of accelerated momentum in close-up. We have delivered a strong performance in hair care as we have repurposed brands and focused our innovations to help drive salience. In skincare, both Glow and Lovely and Glow and Handsome are successfully on the shelves, and we will continue this journey of celebrating inclusivity and individuality. While the essential part of our skincare saw a good pickup in demand, winter portfolio sell-in was muted given the adverse trade sentiment and liquidity constraints. When we come to our foods and refreshments, riding on the consumer trends of in-home wellness and immunity, our foods and refreshments business has sustained high growth momentum and has actually grown at 19%. In particular, our tea performance was very strong with all our all our brands growing in double digits. The unprecedented inflation in tea was managed very, very well. Our domestic nutrition business delivered a competitive performance. Supply chains that had been impacted in September quarter due to COVID and ER issues have now been fully resolved and supplies fully restored. Boost has been launched nationally. When I look at our P&L, we have been playing with all the lines to deliver profitable growth. Our strong savings funnel, judicious and calibrated pricing in tea, synergies in nutrition have enabled us successfully manage the headwinds of commodity inflation and adverse mix. We have significantly increased our investments behind our brands on a sequential basis. EBITDA at 2,869 crores was up 17%, and net profit at 2,009 crores was up by 9%. Given the performance, we are very happy to share with you that the board of directors of the company have approved a payment of rupees 14 per share as interim dividend. This amounts to about 3,289 crores and is actually rewarding the shareholders in these challenging times. Looking ahead, we are cautiously optimistic and we believe that the worst is behind us from an economic perspective while the COVID situation remains uncertain. Rural growth is looking resilient and this needs to sustain, while urban growth is a little uncertain. Inflation in select categories and adverse mix are likely to put pressure on our gross margins in the near term. But overall, if you see, I think the key word for us is actually cautiously optimistic about the prospects of the business going forward. We will continue to manage our business with speed and agility. Our multi-stakeholder model, portfolio of brands, organizational agility, and quality of leadership will enable us focus and deliver competitive volume-led growth. We remain confident of the medium to long-term prospects of the FMCG sector. Thank you, and now I hand you over to Prasad Pradhan, please.
Thank you, Srini. Priyanka Iyer from ET Now, would you like to ask the first question, please?
Thanks a lot for that. Thank you so much, sir, for having all of us. Priyanka Iyer here from ET Now. So firstly, I'd like to ask you, you spoke about how rural growth is resilient. So if you can tell us about the growth that you have seen in this quarter in the rural market as well as the urban market. We know rural is leading the way, but what sort of a growth we have seen specifically in both markets?
Sanjeev, would you want to take that, please?
Yeah. Srini has given you the breakup of growth. If you look at it, health, hygiene, and nutrition portfolio, which is 80% of our business, has grown at double digits. And discretionary, as well as out of home, which has been seen about 20% of our portfolio, which has had a negative growth of about 25%. Now, most of the out of home is in urban areas, which is very apparent. And that's the reason, because of lockdowns, vertical lockdowns, and people still not stepping out, has had an impact. So when we say 10%, that would mean that rural growth would have grown double digit. And so that is the reason. And we are very pleased that all the steps that the government has taken, be it in terms of providing the food grains to the people, direct transfer of money, increasing the MSP, increasing the outlay in Manrega, and a good harvest, is very clearly visible that the rural demand has been resilient.
So you told us that you've cut prices in fabric wash due to lower commodity prices. If you can help us with how much, and if there are any other price actions that you have taken in this quarter.
So Sanjeev, maybe I'll start and then you could add in the. So I think it's an important, I think we've had some very clear principles on how we want to manage commodity prices, whether it's actually inflation or reduction in prices. I think giving the right value to the consumers is of paramount importance, and more so in conditions as we are today. In case of laundry or home care, because crude prices have come off, we have in the quarter passed on about 2.5% kind of price cuts. Again, this is, when you look at it from a geography point of view, competitive intensity, and it's a calibrated approach. And if we find crude coming off further, we will be more than happy to pass on the benefits to benefit the consumers. It also helps demand generation. It also helps us being more relevant for the consumers in this need. The other place I think it's important to call out is in tea. As some of you would be aware, tea category has seen inflations upwards of 50 to 70%, depending on which blends there are. This is unprecedented, and no one has really seen these for many, many years. Here again, we've been very judicious and very calibrated. So some of the quantum of pricing, while we're not talking about it in its totality, it's somewhere in high teens, nothing like the 50 and 60% inflation that you see. We are making sure that we are very judicious and calibrated in terms of passing on minimal price increases. We are managing the total P&L through various levers of our savings and our growth leverage. And I think that is also positioning us very well, both from supporting consumers as well as having the right business momentum in these challenging times. Let's say these are two examples of places where we've had prices being reduced and very minimal prices being taken with reference to very high levels of inflation. Sanjeev, any thoughts and comments from your side, please?
No, absolutely. Yeah, we are always circumspect when it comes to taking price increase. Our entire focus is in ensuring that the price value equation for our brands remain intact.
So just very quickly, I want to ask
Priyanka will come to you. Priyanka will come to you. Priya, do you have a question? Priya Sheth?
Yes. Thank you so much, gentlemen. I had a question with regards to the overall foods business. The foods and refreshments business has grown 19%, perhaps seen significant growth owing to the whole Horlicks integration. So what's been the strategy out there in terms of business? Is this kind of growth momentum sustainable? Also, follow up to that, within the essentials and discretionary space, what is the kind of growth that you're seeing? Are you seeing recovery coming back in both these pockets?
Yeah, first, I think the important bit, Priya, is that the 19% growth in foods and refreshments excludes the mergers and acquisition of HFD business. Yeah, and we have had excellent growth this quarter with tea, with coffee, as well as the foods portfolio. So the 19% growth, like I said, is not taking into account the addition of the GSK portfolio that's come into our fold. So it does not include the health food drinks or the nutrition business?
So the reported growth, if you include that, will be about 83%. So 19% is really the like-for-like growth. And as Sanjeev said, it's been good double-digit growth in foods as well as in our tea business.
If you look at personal care space, I wanted to understand which have been the categories that are still under pressure according to you, and how long will these categories take to recover so far? You've already called out the categories that have done well this time.
Oh, absolutely. First, we are absolutely delighted with the progress that we have seen in beauty and personal care. Our skin cleansing business is doing, or the personal wash business is doing extremely well. We've got double-digit growth in oral care. We've got double-digit growth in hair. So really the discretionary categories, and which are more linked to the fact that people are still confined in their homes, have been impacted. And these are skincare and deos business. But if you really were to look at it and compare with the previous quarter, in the previous quarter, we had minus 45, what we call as the discretionary business. And this has now come down to minus 25. And these are great brands. And we believe that once people start stepping out, this will again get back into its normal growth rhythm.
Going forward, I wanted to get a sense from you in terms of the intermittent lockdowns that we've been seeing over the last couple of months. There have been certain geographies that have been impacted. Going forward, do you have a strategy in place to combat these kind of intermittent lockdowns that may come up in the near few months, considering that there may be an expectation that COVID numbers may go up in the winter season?
First is we have demonstrated a lot of resilience. And we try to ensure that if there is any vertical lockdown, to the best extent possible, that our consumers do not suffer from lack of our brands. And that strategy has held us in good stead, and that is the focus that we will continue. Accepting clearly that the first job of the government is to protect the people and help the marginal sections of the people. So if there are vertical lockdowns, and if they do come in, we will do our best to ensure that the consumers do not run out of our products and brands.
Devanshi, would you like to ask the next question?
Just adding something to what Sanjeev has said. We've done many things, actually, having more inventory at our distributors, having multiple models where one of our distributors can actually help the others in case there is a lockdown. Using a lot of data and analytics to then say what kind of essential products need to be stocked up in clear geographies, leveraging the e-commerce channel. I think the whole space of speed and agility in our ability to respond at various levels in the value chain has been significantly enhanced, given the kind of super quality work which has happened between our sales and our supply chain teams on an end-to-end basis. I think if you see where we started in April to where we are now, it's been a serious, significant step up. And I think that positions extremely well. And I think the point that Sanjeev also has made is right. These are essential products. Given the experience, and the government will also do their best to make sure that anything in the space of essentials does not get disrupted, even should we have the unfortunate circumstances of cases spreading again.
Thank you.
Yes, Devanshi. Devanshi, would you like to ask the question? She has raised.
Hello, am I audible?
Yes.
Hello, sir. Hi, afternoon. So I needed a little bit of clarification on the volumes. The volume growth, which is just 1%, is this ex-GSK portfolio? And if we include the GSK portfolio, what is the volume growth exactly? And second, have we taken any price increases, or did we decrease the prices in any of the segments this time?
So let me clarify, Devanshi. I think let me put it out clearly. If you include nutrition, our growth is 16%. Yeah, so that's the, because
this is the
doesn't have a comparator. So that's total value growth of the business is in 16%. Okay. So obviously by that logic, the volumes at that level will be in double digit. What we are doing is we are keeping aside the whole nutrition place because it doesn't have a denominator and therefore it doesn't give you a right comparison. So what we're saying that if you exclude the nutrition business, our business grew in 3% value terms with an underlying volume growth of 1%. So important to understand that in the previous quarter, what was a -7 is now +3, and more than 70% of our business is gaining penetration. I think that's the important number. So if you compare like for like, -7 is +3, or with GSK, what was +4 previous quarter now is +16. Yeah, so that actually then starts to give you a clear picture of the sequential progress.
All right, sir. Thank you so much.
Charlene.
All right, that's the management of HUL giving us a little more clarity with respect to that volume growth number as well as the road ahead. They're talking about how their operations and service levels are now back to the pre-COVID levels. And yes, much in tandem with what the other FMCG players have been echoing, that the rural market has been resilient and the demand in urban India in comparison has been rather muted. They have seen profitable as well as competitive growth and the economic outlook has improved. But Ajay, one of the key factors that the management highlighted is that now the worst is behind and that they're cautiously optimistic about demand recovery. How would you read into these statements?